Welcome, MTG Crypto Tribe, to another insightful Morpheus Crypto video. Today, we look at a tale of two different markets as bullish divergence between Bitcoin, the king of crypto, and the altcoin market increases. Bitcoin, BTC, has pulled back to a critical juncture, its 50-day moving average. The big question is, will this crucial support level hold? If so, it could potentially offer a fantastic opportunity for traders seeking to enter the market with reduced risk. But on the flip side, Ethereum, ETH, has been falling steadily lower since its recent October peak. The altcoin benchmark is now trading well below its 50-day moving average, as well as its 10 and 20-day moving averages, and is now in danger of a potential breakdown below support of a 2-month trading range. Is this bearish momentum here to stay, or could we soon see a surprise twist in the altcoin story thanks to Bitcoin's strength? Finally, recent strength in Bitcoin Dominance Index, BTC.D, has been a guiding force, keeping Bitcoin in the lead. However, this key indicator has begun to approach major resistance of its 52-week high. If Bitcoin dominance takes a rest, could it trigger a rotation of funds from Bitcoin to the altcoin realm? Indeed, but be wary. Recent turbulence in the altcoin market has left its mark on the charts. In today's video, we dissect the key charts that could shed some light on the crypto market's next move. So let's dive in, but first be sure to press the like button and subscribe to ensure you keep your trading edge in the market. Before we dissect the individual charts of Bitcoin and Ethereum, I'd like to draw your attention to this chart we're looking at here. This is a line chart overlaying the price action of BTC with ETH. And this is going back almost 3 months. So the way that the line chart works when we're comparing the price of assets is rather than looking at the exact price of the asset, this is comparing percentage gains or percentage weakness. Notice on the right side of the scale here, this horizontal line is 0%. So at the starting point of our chart is 0%. And then this shows you how much up or down in percentage terms each asset is. So we use line charts as a great way to easily spot relative strength or weakness. If you've been following Morpheus for a while, you probably already know that relative strength plays a major role in our swing trading strategy for crypto. And this is a great way to easily spot relative strength or weakness. Now, once you've been trading for a while, you'll be able to spot relative strength or weakness by looking at individual candlestick charts. But in the meantime, this is a great way to get you up to speed. So let's take a look here at what's going on. Well, we noticed that going back almost 3 months, Bitcoin and Ethereum were tracking relatively in sync with one another. When we had that big sell-off in mid-August, they both sold off pretty equally. And then when we bounced towards the end of August, they both rallied and pretty much have kept pace with one another. Very similar percentage gains and losses from about 3 months ago up until middle of September. But that's where things started to change. Take a look here. After this low, this dip below the range in September 11th, since then we started to notice growing divergence between Bitcoin and Ethereum. Notice how Bitcoin on the first bounce, it rallied almost back to test its prior swing high there, but Ethereum barely rallied and stayed well below its prior high. So that was our first sign of relative strength emerging in Bitcoin. And then when Ethereum sold off more than Bitcoin, when we had a pullback, and then in the next rally up, we briefly spotted relative strength in Ethereum. Notice how Ethereum, when it rallied, it peaked above its prior high here, but it didn't hold. It just peaked one day, and then it fell back down. And notice now we are again seeing major relative weakness in Ethereum versus Bitcoin. Since the peak on October 1st, Bitcoin has held pretty firm near its recent highs, while Ethereum has just gotten blasted. And we'll take a look at the individual charts here in a minute. But notice how Ethereum now has gone all the way back down to test its lows of the past several months, while Bitcoin is still holding up. It's on a pullback, but still holding up much better than Ethereum. So going back to the starting point of this chart, which is near the middle of July, since then we can see Bitcoin is down 10.3%, but Ethereum is down 17%. So this is the type of divergence that we're always looking for, because by tracking whether Bitcoin or Ethereum is showing relative strength, it gives us an indication of where we want to focus our attention on swing trading. For example, if Ethereum is showing relative strength to Bitcoin, we're typically going to have more altcoin setups for swing trading. On the other hand, if Bitcoin is showing relative strength, we may be lighter in the altcoin market and could possibly be looking then for entries in Bitcoin, such as we just closed out a winning trade recently in Bitcoin. So now let's go ahead and take a look at the individual charts of Bitcoin and Ethereum. But in the meantime, I wanted to show you how to use these line charts. A good idea to do this to continually compare the price of two different assets and the relative performance. And by the way, you can do these line charts very easily on this TradingView charting platform, which is what we're using here. It's a great platform that we highly recommend. So now that you can clearly see the relative strength that Bitcoin has started showing to Ethereum recently, let's go ahead and take a look at where Bitcoin is at. We mentioned earlier in the start of our video that Bitcoin is pulling back to a crucial support level, and that's definitely the case. As you can see here, this red line is the 50-day moving average. And notice how just a few days ago we came into support of that 50-day moving average, held support, and yesterday also held support, and today holding above support as well. However, what we haven't seen is we haven't seen a bounce off this 50-day moving average yet. Often when we see the first touch of a 50-day moving average after an uptrend, the first touch of the 50-day moving average often attracts buyers and sparks a rally in the market. But in this case, we haven't seen that. Instead, we're just barely holding on to the lows here. So a little concerning that we're not seeing the bounce, because that increases the odds of the 50-day MA breaking. But nonetheless, it is holding so far. Now, the 50-day moving average is crucial because it's generally considered to be a reliable, highly reliable indicator of intermediate term trend. And many institutions like banks and mutual funds actually do programmatic trading based on using the 50-day moving average as a pivotal level. Always keep an eye on the 50-day moving average, very important level. In fact, you take a look here, if we scroll back further, you can see how the 50-day moving average worked well. Back in May of this year, we tried to rally above the 50-day moving average, couldn't do it, acted as resistance. Prior to that, 50-day moving average acted as support. And then when we broke below it, it acted as resistance. Then we popped above it in June, came back and tried to hold support. In fact, for like a week and a half, just rode on that support level, that 50-day moving average, sliced below it, tried to get back above it in August, couldn't. And we've been below it then from the beginning of August until basically end of September. And then Bitcoin just recently popped back above it and now has pulled back to test support of that 50-day MA. Now, why do I tell you all that? Because I want to show you how reliably the 50-day moving average can work as an indicator and why it's so important. And also, if you're new to technical analysis, it's important to understand that a prior level of support becomes the new resistance level after the support is broken. Just like here, you can see after we broke this support, the 50-day MA now became the resistance, right? And vice versa, the opposite is true also, which means that once you break out above the 50-day moving average resistance, then a pullback to that level should act as support. Right, so this is a very closely watched level that we're monitoring very closely right now. If we don't bounce soon, then the odds increase of a breakdown below the 50-day moving average, which could spark some significant selling in the crypto market. So in terms of support level to watch in Bitcoin, the 50-day moving average is currently at 26,670, but really the level to watch is the 3-day low. I mean, we wouldn't want to go below the low of the past 3 days, which is basically 26,550 area, 26,550. So that's important level to watch. However, as we're going to point out here when we show you the weekly chart in a moment, even if we do break below that, we might see some selling, but there's much more important support that's going to catch the price soon. We'll take a look at that in a moment. Now, if Bitcoin does try to rally off its 50-day moving average, the first resistance you want to keep an eye on is going to be the 10 and 20-day moving averages, the green and blue lines here. We formerly saw the price of Bitcoin holding above the 10-day moving average as support, but just a few days ago, we sliced below it, so now that has become new resistance. So that's right around the 27,200 level is where the 10 and 20-day moving averages are converging. So that's the first point you want to keep an eye on, which is also the low of this range that we broke below. So if you're looking to exit Bitcoin, for example, any bounce into the 27,200 area would be a relatively decent place to try to sell into strength if you're concerned about lower prices. If we do get above the 10 and 20-day moving averages, then we got to keep an eye on this downtrend line. We've got a downtrend line that formed starting with the highs of July, and you can see right here, neat downtrend line that has formed. And if we do get above the 10 and 20-day moving averages, then we got to keep an eye on this downtrend line. We've got a downtrend line that formed starting with the highs of July, and you can see right here, neat downtrend line that has formed. And if we do get above the 10 and 20-day moving averages, then we got to keep an eye on this downtrend line that formed starting with the highs of July, And if we get up to currently right around the 27,800 level, we're going to run into resistance of that downtrend line. So a lot of work that Bitcoin has to do before it gets up to that price. So we've got resistance all the way up. And for support, of course, the 3-day lows is crucial. And let's take a look at the longer term weekly chart of Bitcoin. This is really what I wanted to show you was the weekly chart, because we use multiple time frame analysis at MTG. And the longer term trend generally holds more weighting and more power than the shorter term trend. But we use the shorter term trends to fine tune our entries and exits when we send trade alerts to our members to tell them when we're buying and when we're selling. That's based typically on the daily time frame and sometimes the 4-hour. But the weekly charts are important to know the big picture trend. And in this case, we take a look at the price action of Bitcoin. We can see here we got an uptrend line that we can draw from the lows of 2020 all the way back here. We've got this uptrend line, right? So this uptrend line, look at that, perfectly converging with this red line, which is the 50-week moving average, not the 50-day, but the 50-week. So we've got very neat convergence right here, or confluence, whichever you'd like to call it, of the 50-week moving average and the uptrend line. And that's currently converging right around the 25,000 mark, which also conveniently lines up with the lows of the recent range. As you can see here, mark those lows. So 25,000 becomes a very, very important level because of this convergence of support. So obviously, when you're talking about support and resistance levels, the more support and resistance levels you have meeting at the same price, the more powerful that support or resistance is. So a 3-year uptrend line already by itself is powerful, and that's something that would already hold a lot of weighting. But then when you combine it with the 50-week moving average lining at the same price, it becomes even more significant, along with that horizontal price support. So what that means is that if Bitcoin does break below its 50-day moving average on the daily time frame that we just showed you, then look for the weekly uptrend line and the 50-week moving average to provide support right around the 25,000 level, which would be definitely a relatively low risk area to consider buying Bitcoin, especially if you keep a tight stop right below the support. So you're either right or you're right out. So it's very interesting. Even if Bitcoin doesn't pull back further and it just trades sideways for a while, well, after a couple more weeks of sideways action, then this rising trend line and rising 50-week moving average will meet the price through a correction by time. So either we get a pullback or sideways, but either way, we should soon see Bitcoin coming into contact with major support. We want to keep a close eye on that, because that could actually provide a solid impetus for investors to return to the crypto market, especially those that are a little bit technical analysis savvy. Now, next up, let's go ahead and take a look at Ethereum's daily chart and see what we've got going. All right, first of all, on the weekly chart of Ethereum, which we just looked at for Bitcoin, notice that Ethereum is already below its 50-week moving average. In fact, just this week, it broke below the 50-week moving average, and it's just kind of hanging on here by a thread. And if we break below the lows of this 2-month range, then we're already below the 10, 20, and 50-week moving averages, and that would be not so good. Now let's drill in to the shorter-term daily chart and take a look at what we got. Again, the divergence becomes very clear. Whereas Bitcoin is still above its 50-day moving average and still relatively near its recent highs, Ethereum peaked on October 1st and pulled back to its 50-day moving average. Now, when it pulled back to this 50-day moving average, we actually took a shot at buying Ethereum because we had support of this prior range, and we had the 50-day combined with the 10 and 20-day moving average convergence. So a lot of support there, and that gave us a decent risk reward for a buy entry. But we ultimately stopped out of the trade because the 50-day moving average failed to hold. After a couple of days, we sliced through it, and we definitely don't want to sit around holding a loss once it's hit our stop. So we got out of Ethereum, very small loss because we had small position size, and we moved on to the next trade. And it's good we did get out, because that's what stops are for. The stops enable you to have a small loss rather than having a small loss turn into a big one, which is where we'd be right now if we didn't honor that stop. We've got Ethereum all the way back down to its lows and basically testing a 7-month low here. The low of this range is basically for the past 7 months. If we break below it, this will be the lowest price we've seen since March. And there's a lot of overhead supply that's being created from this sell-off. I mean, basically a week straight of selling. So any rally attempt is going to be met with resistance and a lot of overhead supply, which could make for choppy market conditions. But as always, keep a close eye on the volume, because if volume is strong, then that could be what's necessary to absorb the overhead supply. So keep an eye on volume. As with Bitcoin, we've got a downtrend line from the highs of July, and that's actually well above the current price, so we don't need to worry about that quite now. But for support on Ethereum, the 2-day low is obviously where it's at. Yesterday's low is pivotal. Yesterday's low is 1522. If we break below that, then there's no support really to catch the price until we get all the way back down to around 1465 to basically the 1370 to 1465 area. So on the other hand, we could hold support of this prior low. That could actually provide traders with a reason to step in. But on the other hand, if recent strength in Bitcoin remains and Bitcoin catches a bid at its 50-day moving average, then that could lift the altcoin market and lift Ethereum higher. But we'd be concerned still with the fact that we're trading near the lows. We'd want to see at least a higher low form on the daily chart before we were interested in establishing a significant number of positions in the altcoin market. There's a lot of overhead resistance. We've got the 10, the 20, the 50-day moving averages, a lot of overhead supply from people that were trapped in at higher levels. So if you're trading right now on the long side in any altcoins, we suggest consider taking your profits quickly, lock in profits into strength as opposed to trailing stops, because we're really just not in an uptrend right now. And the best thing is probably to sit on the sidelines in cash or to focus on Bitcoin. But if you are doing any trades on the long side, day trades, short-term time frame, or 1 to 2 day trades, that's what we're looking at right now, if anything, because the odds simply are not in our favor for buying on the long side. We every day look at several hundred altcoin charts to look for trade setups, and after scanning hundreds of altcoin charts, there's a lot of damage that's been done. And typically, when we saw this pullback that occurred from the October 1st highs, when we started getting the pullback, we started to see a lot of nice chart patterns set up, like in the Solana, SOL, and Link. And those pullbacks could have been constructive chart patterns to enter. But now, because of recent weakness in Ethereum, those charts have sustained a lot of technical damage. And we're really not seeing much out there at all that looks good. Finally, let's take a look at an index known as the Bitcoin Dominance Index, BTC.D. For those of you who are new to crypto, you may not be familiar with what this index is. And basically, it's an index that shows what percentage of overall assets in the crypto market is Bitcoin and what percentage is the altcoin market. So as the index is rising, it means that a higher percentage of the total market cap of crypto is in Bitcoin. And if the index is falling, it means that Bitcoin comprises a smaller percentage, a declining percentage of total crypto market cap. And so looking at it another way, put more simply, that is that a rising Bitcoin dominance index is bullish for Bitcoin, but maybe not so good for the altcoin market. And when this index is falling, it's the opposite is true. We're typically seeing funds rotating into the altcoin market and out of Bitcoin. So if we keep that in mind, that can be a factor that helps us determine, basically assist our analysis in determining whether we want to focus on Bitcoin or the altcoin market. And on this daily chart here, we can see that over the past year, Bitcoin dominance index has been trending higher. In fact, just recently broke out above some resistance. We had resistance here for quite a while at the 50 level. Let's scroll in a little bit. There we go. We can see we broke out above this prior swing high from August, just about a week ago, and that's what sparked that strength in Bitcoin. But now we're pulling back, holding this 10-day moving average. Now, if Bitcoin dominance index continues higher, then we could see continued weakness in the near term for the altcoin market. But Bitcoin dominance index is approaching resistance of its 52-week high, which is set back here in late June. And there's also a shelf of resistance here from mid-July. So we could see a potential pause or pullback in Bitcoin dominance index as we approach this resistance level, and that could spark rotation into the altcoin market. But for now, clearly we don't want to fight the trend, and the uptrend in Bitcoin dominance means that Bitcoin is where it's at. So we continue to look for potentially low risk entry points in Bitcoin. Right now, because of Bitcoin being at its 50-day moving average, we are monitoring it for potential trade entry, but we don't like the price action. We don't like that it hasn't really bounced since coming into its 50-day moving average like we often see, but we are monitoring price and volume. If we do start to see some more bullish behavior in Bitcoin, then we'll probably look at re-entering on this pullback. If we do re-enter and you're a member of Morpheus Crypto, you'll receive a trade alert to your phone with our exact entry and stop prices for the trade setup. If you're not yet a member of Morpheus Crypto, head on over to morpheustrading.com and drop your name and email into our homepage to receive our regular video analysis like this, and as well as individual crypto altcoin trade ideas as they occur. Thanks for joining us, and we'll see you back here in the next Morpheus Crypto video.